Hi all and welcome to our trade breakdown series. It's the second video over this weekend on this subject, where we go a little bit deeper into intraday patterns and the power that intraday patterns combined with timing, liquidity, earnings, basically the whole perfect storm to create an amazing move in a stock. Now the examples that I'm going to show in this video, I've talked about them before, but now it's more like a concentration of power explaining them and explaining the logic in depth behind each trade. Keep in mind, those are not trades that are coming out of nowhere. Those are not small caps that are gapping up, low volume stocks that are under the radar, small caps that jump on some buyouts or whatever, dealing and wheeling. All of those examples are from legit stocks that are basically traded by Wall Street by tens of millions of shares, maybe some of them even more on a daily basis. So they are not under the radar. They're definitely way above the radar, under scrutiny on a daily basis. And the idea here is to build the confidence that day trading can be very, very profitable, and sometimes also with very little risk. So because if you're profitable with a lot of risk, and sometimes the bad case scenario is happening, then of course your profitability is getting hurt a lot. In this case, in these examples that I'm gonna show, it's the opposite. Okay, let's start with the number one example, PDD. That's the Chinese parent company of Temu. I don't think there's anybody in Europe or the United States, or definitely not in Asia, that doesn't know what Temu is. Investors clearly know. So take a look at Temu. If I'm not going to bring the daily chart because I don't have enough time. We are very busy in this video. So the stock gaps down like 20% on earnings. Delivers a move from let me see the numbers here, like 116, almost down to 96 or 97, then creates a base here at the lows of the day, no big deal, and starts to climb. Okay, so far so good. Then it reaches this plateau of 99, and you can see that it sits here under 99 more than 20 minutes. Okay, more than 20 minutes, that's a long period of time if you're observing a stock, and creates a bull flag formation. So the move is up, this is the trend, the move is up, and it creates here a bull flag formation. If anybody that's day trading knows that this is a perfect pattern. Now what is the risk on this trade? Some observe the trade as down, the risk is down to the view up. That's like roughly 70 cents. There is another way to trade it with a very tight stop loss here, around 20 cents. It's 18, but let's round things up to 20. And the move, once it breaks with a huge volume, take a look at this pickup in volume here at the lows. This is the pickup in volume. You can see a double or triple pickup in volume versus the previous bars. Those are 2-minute bars. And then the stock moves up, risking 20 cents, $4. So the move ends above 103. This is the move. Now you risk 20 cents, the stock moves $4. How much can you take out of these $4? 1, 2, 3, 4. That depends, but there's no doubt that when you can trade a $100 stock with a 20-cent stop loss, that's roughly 0.2%. It's not 1%, it's 0.2%. And okay, you can deliver a risk reward or reward risk of 40 to 1, but you can deliver 30 to 1 or 20 to 1. Those are unbelievable numbers that are, I don't want to say impossible in other markets. Maybe they are possible. Everything is possible, but those are under the radar as day trading stocks almost on a daily basis. It's not like I did any AI research to find this trade. I mean, PDD is on our watch list. I don't want to say every day, but it's on everybody's watch list. That's why I said those are Wall Street typical trades where millions or sometimes tens of millions of shares are being traded. So nothing is hidden here. This is what you want to trade as a day trader. This is the perfect trade. Okay, so if you take $1 out of 4, that's a big mistake. If you take 2 to 3 out of 4, that's amazing. Now, how much do you buy? If you acknowledge the 20-cent risk, you can increase your position. If you acknowledge the liquidity, the trend. Take a look at the trend. The trend is, hold on a second, this is not the trend, this is the trend. The trend is clearly up and continues to be up. So it's not like a counter trend play coming out of nowhere. You don't have time to prepare, blah blah blah. No, this is like I said before, this is the tuna coming to you and getting on board, nothing less. So that's my best example for the week. I mean, that's the ones that I observed. Maybe there are dozens of others I don't believe, but there are probably other examples that I didn't see. But that's on you guys to figure out. The same stock delivers a day after this breakdown. Well, by luck, under 99. Take a look at the 99. So why is 99 a short play? First of all, the stock is after a huge gap down. Then it tests the 99 in the morning session, once in the morning session, and then again, and then again, and then again, until it breaks. So how much time do you have to prepare for this trade? 3 hours, 4 hours? I mean, you can almost fall asleep here. And the risk on the trade, again, very little risk. In this case, it's 20 cents again. Pretty much 20 cents. The bear flag above the breakdown. Now, once it breaks, it moves down from 99 to 97.50. How much is it? $1.50. Okay? So, $1.50 risking 20 cents. That's all, and again, that's late in the day. Late in the day, 8 to 1. And again, I'm not trying to force anybody into taking this type of trades, but if you're not taking this type of trades, what kind of trades are you taking? Okay, those are the best patterns with low risk, trading the most liquid stocks with a fundamental reason. I mean, the whole combination here is working in favor of these trades. The whole market, not the whole combination of factors, but the whole market is working in favor of these trades. So I gave you an example of a 8 to 1 risk reward. Before it was 40 to 1. Obviously, everything is on paper. I mean, you can take you risk 20 cents. You want to take a 20-cent partial, do it. It's just insanity. Let's move to another big mover. Again, another stock that's definitely not under the radar, and this is PLTR. The daily is amazing, the volumes are amazing. It's definitely not as easy in terms of trading this PLTR long play as much as it was to trade PDD. However, it was very easy to observe for those who are looking and observing charts intraday, and numbers intraday, which is our business as day traders, to look and see that PLTR on a day where the Nasdaq was flat, and most of the trading day was negative, but closed flat, and PLTR is up 6%. So when PLTR is up 6% and the Nasdaq is flat, something's going on. Okay, it's way stronger than the market, and that's the signal. In this case, there were no earnings, there were no news that I knew. Maybe there were news, but I didn't know about this news, and I think most of the market obviously they knew because there were no earnings anyway. So the stock is moving like crazy in the morning session. You don't observe it. If you observe it, fine, but when it pulls back and then delivers this move, guys, again, round numbers again. I forgot to talk about the importance of round numbers. So it was twice 99 in PDD. Take a look at this 125. Okay, so the reversal here over 125. Okay, you don't know if it's going to move up 20 cents or 30 cents, but you do see, and it's easy to see on the chart, this higher lows pattern on the 2-minute or the 3 or whatever time frame you're trading. I don't suggest 5 minutes, so it's either 1, 2, or 3. I'm using 2. So higher lows, round number entry, and this triangle move higher. Now you don't know how much is going to move. You know that your risk is 50 cents. That's the risk here down to the triangle. Now you can take more risk, which is reasonable in this case, and risk $1 in this case. Let's talk percentage wise. Or $1 on $125 stock is less than 1%. So you take a worst case scenario in case the stock dives uncontrollably, and that's it. Okay, it didn't happen. The stock basically traded a couple of cents under the round number and then closed up $7. So it's either 7 to 1 or 14 to 1, whatever you want to call it. This stock is under the radar. It trades millions of shares. It's super liquid. It's an intraday play. You don't have to wait for the 7 to 1, $7 winner here, and you can close it at the bell, which is the beautiful thing. Again, what more can you ask from a day trading stock? Little risk, amazing return, and you want it to be observable. You want it to be not under the radar. You want it to be as observable as possible. I forgot the right word, but it will come back to me at one point. So you want to observe, or the power to observe is under your fingernails, because you're watching the most liquid stocks in the Nasdaq, or the most liquid stocks on Wall Street. In PDD's case, it's a dual traded stock. Okay, guys, I'm not going to show you the last. You know what? Let's spend 1 second with the last example, and then I will do tomorrow another video just to complement. Take a look at this trade, and we will discuss it tomorrow. Take a look at this. I'm sure that it's not shortable on most of the platforms. Nevertheless, it's a trade that basically, hold on a second. Okay. This move in CRWV. We'll talk about it in our next video. Thanks a lot, guys, for being here with us. Remember to like, subscribe, and we'll see you, of course, in our next video.